Good afternoon, everyone. My name is Daniel Rodriguez. As Megan said, I am with Bank of the West slash BMO. We're actually going through our conversion this weekend, so we're excited to fully transition from Bank of the West to BMO. And with that, I'll get started here. So again, good afternoon. Welcome to our workshop on credit scores and reports. We're going to be looking at different things that's part of this workshop, and then I'll go over some topics that we're going to be covering. So by the end of this workshop, you'll be able to explore the importance of credit scores and reports, learn how to access information about credit scores and reports, discuss strategies to build and improve credit, and finally, identify how to protect credit from incorrect claims and fraud. Your credit can have a big effect on your financial life. We all know this, right? Your credit report provides a snapshot of your financial habits that financial institutions, cell phone companies, credit card companies, and others used to get a sense of creditworthiness. Understanding how credit scores and reports work can help you keep your finances healthy and help you achieve your financial goals, such as buying a home, leasing a car, or paying off debt. Now, I'd like to start here. If you guys wouldn't mind in the chat, please type your response to the following question. How well do you know your credit score? So one being, I know it exactly. B, I have a rough idea. C, I don't know it. And D, I don't know what a credit score is. Awesome. Thank you, everyone, for your responses. And we will touch on, different aspects here of what a credit score looks like, just to make everyone feel a lot more comfortable. So I'll start with the basics. So a credit score is a 3-digit rating that tells the lender how likely you are to repay debt. Different lenders use different criteria to calculate it, but in general, the data is grouped into 5 categories. Those 5 categories are payment history, amounts owed, length of credit history, new credit, and credit mix. So if we look at the slide here, it gives you an idea, right, of what the different categories are based on the 3-digit score. So as we see here, poor credit is less than 579. So typically, people with a score of 579 or below could probably use help to rebuild their credit. Fair credit is considered between 669 and 580. In this range, it may be difficult to qualify for loans. But if you do get a loan, it may have a higher interest rate because you're considered a higher risk borrower. Good credit is between 670 and 739. If your credit is between 670 and 639, you may have blemishes on your credit report, and you might be restricted to higher than average interest rates as well. And then we look at the very good credit score, right? That's between 740 and 799. This credit score range will help you qualify for most loans, and you probably have a solid credit history with a few missed or late payments, or your credit history may simply be shorter. And then finally, where I want everyone to get to, exceptional credit, right? Anything above 800. If your credit score is above 800, you have the strongest credit history and qualify for the best loan terms and interest rates. Now, many people, especially young people or people who have recently immigrated to this country, have no credit history. It's not a bad thing. It's not the same as having bad or poor credit, although people without a credit history may face similar difficulties in getting loans or proving their creditworthiness. However, there are many steps you can take to start building credit. As we see here, step 1 is opening a line of credit. This could be a credit card through a bank or retail store. One of my favorites to talk about is Target, right? I think we all enjoy going to Target. So that would be one of these retail store cards that can qualify as opening a line of credit. Now, there is special products such as secured credit cards and credit builder loans, and these are designed to help boost your credit. But they may have restrictions on how much money you can borrow, or many require you to put down cash collateral. So is anyone familiar what I mean as far as a secured credit card? If you don't, I will let you know. So as I mentioned, right, these are called secured credit cards. So how a secured credit card works in the banking world is you would go to your local bank, BMO, Wells Fargo, Bank of America, your local credit union. And what you would do is you would secure a minimum of $500 into what's called a certificate of deposit, or more commonly known as a CD. What ends up happening is that amount is locked into the CD while you have the secured credit card. Typically, what ends up happening after 12 months, if you work the secured credit card, pay on time, the bank will release those funds in that CD, and that secured credit card is not only helping you build credit, but also it'll become your first unsecured credit as well. Second way, right? I just mentioned it. We request that your payment history be reported, and if you pay your rent and utilities on time, you can request that your landlord or utility company report your positive payment history to the credit bureaus. This will help you also build that credit. And then step 3, this is an optional form to build your credit. Typically, you may request a family member or a friend with good credit to co-sign on a loan or credit application. Well, remember that your actions will affect their credit. We'll talk more about this later. Also, make sure joint accounts are reported to credit bureaus as well. And then finally, right, pay all your bills on time. You will hear me stress this throughout the presentation here. Pay your bills on time. And if you can, in full. And please never miss a payment. If you can make a minimum payment on your new credit cards, please make a minimum payment, because this will definitely help you build credit. And if you don't, you can definitely hurt your credit as well. And with that, I'll go into a little scenario here, a tale of two friends. So Anna and Bella have been friends since middle school. They are both single and both have steady incomes to pay their bills. Anna and Bella decide to buy homes in their childhood neighborhood. Bella receives a loan without any trouble. Unfortunately, Anna has a difficult time getting a loan. When she finally gets her loan approved, her interest rate and insurance premiums are higher than her friends. Now that you know Anna and Bella's story, let's see if we can figure out the details. So why do you think this happened to Anna? Let's not all be shy. You can write it in the chat if you like. Thank you, Soraya. Yes. Great answer. Yep, she didn't pay past bills on time. Thank you guys for those answers. So those are all correct answers. And the main reason, right, as you have mentioned it, this happened to Anna because she had a lower credit score than Bella. And those credit scores were affected by your answers, not paying on time and being late. So credit scores are not the only factor that lenders consider. Factors such as the market, down payment amounts, loan terms, and lender loan policies can influence the cost of a loan as well. Still, experts and research show that one's credit score has a large effect on the cost of a loan. As you've seen, credit scores can affect the ability to get a loan, as well as your interest rates and insurance rates. But they can also affect your eligibility for a rental home, as many homeowners and property managers check credit scores before renting to new tenants. Thank you, Megan, for that. I'm seeing the markings there on the slides. So some other ways your credit score can have an impact on many areas of your life, right? So we know that getting a car, your credit score is taken into account for an auto loan if you buy a car. It can also be difficult to qualify for a lease with poor credit, and late lease payments can negatively affect your credit as well. Now, setting up utilities and phone service as well. With poor credit, it can be harder to set up an account with utility companies and internet and cell phone providers. I know I'm guilty of this as well. Growing up, getting my first cell phone, I didn't have any credit history at all. So I don't know if you guys remember Singular before AT&T took over Singular. I went into the store, got my first cell phone service, and because I didn't have any credit history, I was required to put in a deposit to be able to have cell phone service. That's one of the things that affects by not having credit as well. Now, there are many agencies that prepare credit scores, and they can use different modules to calculate them. However, the most popular scoring models are FICO and Vantage Score. As you can see, there are 3 main credit bureaus in the United States. Credit scores are based on the information in the credit reports from these 3 bureaus, right? So we see here that these are the 3 main credit bureaus: Experian, Equifax, and TransUnion. Now, they, along with lenders, use their own version of the FICO or Vantage Score credit scoring models. I know if you guys are familiar with Credit Karma, Experian has called MyFICO, a separate program that they offer. So those are also other varying credit scoring models that are used. Now, the bureaus keep track of your credit history separately. So it's a good idea to utilize each one. If there are large variations or discrepancies among the reports, you should get in touch with the bureaus to figure out why. Credit scores may also be different depending on the financial product you are applying for. So, for example, a mortgage application may yield a different score for you than if you were applying for a credit card. If you guys have seen when you receive that report back on a credit score, a credit card application, that score may be higher than if you went to a car dealership or applying for a mortgage or applying for a Target card or a Walmart card. Those credit scores are going to vary because each of those companies uses a different scoring model. Now, these are the ways these companies calculate a credit score, right? So as I mentioned earlier, different bureaus calculate credit score in different ways. While the bureaus do not disclose the exact methods or formulas they use to calculate your score, we do know the general factors they consider. The most important factors that affect your credit score are your payment history and the amount of debt you owe. Now, let's take a closer look at each one of these. Payment history. It typically accounts for approximately 35% of your credit score. This primarily includes looking at whether or not you pay your bills on time. Now, do you always pay at least the minimum amount? And if you do, then you're in good shape. If you make even one late payment, though, it will likely have a negative impact. That's why it's so important that you always pay your bills on time and pay at least the minimum amount when you do so. Now, I will give you guys something that's kind of changed in the industry. I don't recommend this, but we all run into emergencies, right? And you may miss a payment. Right now, what a lot of companies are doing is they're allowing people to be late at least 30 days, but not more than 60 days before your credit is reported as negative. So just keep that in mind. I know we all run into emergencies and we can't make that payment, understandable. But I would recommend please reach out to the creditor and say, hey, I won't be able to make at least the minimum payment this month. Please give me time to make a payment the following month. That way, it doesn't affect that payment history. Amounts owed. So amounts owed typically account for approximately 30% of your credit score. The amount you owe depends on two major factors. How much you actually owe on your credit cards or loans. Owing money doesn't necessarily mean you are at risk to lenders. The most important thing is showing that you make regular on-time payments toward your debts. By the way, if you're an authorized user on a credit card or have authorized someone else on your own credit card, their payment history will affect both individuals. More on sharing credit, we'll talk about a little bit later. And typically, what affects your credit is if you're using less than 30% of your total available credit would be a lower risk for a lender than people who are using 90% of their available credit. So simply put, maxing out your credit card can negatively impact your credit score. So to give you a real life scenario, right? We qualified for that Target credit card, got $1,000 credit limit on it. The rule of thumb is to not use on a monthly basis or carry a balance of more than 30%. So what that means on a $1,000 credit limit, it is recommended not to use more than $300 if you are not going to pay it off in full the following month. So if you go above that 30%, it is going to affect your credit score. The other factor that calculates your score is also the length of credit history. Length of credit history typically accounts for about 15% of your score. Credit history is affected by how long you've been managing credit. The longer your credit history, the more information a lender has about your repayment habits and reliability. People with a short credit history, even if it's steady and good, may be at a disadvantage because lenders may consider them to be a higher risk. So it's important to build and maintain good credit early. So I would suggest, if you can, have your parents, family members get you on as an authorized signer if you're under 18, because that'll help you build your credit. So when you do turn 18, you already have established credit. Fourth factor, new credit. New credit typically accounts for about 10% of your full score. So new credit or credit that you've recently applied for accounts for a smaller part of your credit history. Each time you apply for a new credit, a lender runs a check on your credit score, and this temporarily decreases your score. It signals that you might be using too much of your available credit. For example, applying for many mortgages to buy a house in a short period of time doesn't tend to affect your score negatively. So for example, if we're looking to buy a home or purchase a car, if you're running your credit score more than once within a 30-day period, you will not see a big difference in your credit score because you're utilizing that 30-day window for different dealerships to run your credit. So just keep that in mind. If you're looking to purchase a home or looking to purchase a car, make sure that you're doing it all within that 30-day window. Because if you decide to wait and in 60 days you decide to, hey, I really did like that car. You go back to the dealership, they're going to run your credit again. And now it's going to be a double hit as opposed to being that one single hit in the first 30 days. And then finally, the final factor that we use to calculate the credit score is types of credit. Types of credit typically accounts for approximately 10% of your score. People with a good mix of credit, which means credit cards, an auto loan, a mortgage, may have a slightly higher score than those with only one type. So credit scores are extremely complex, and your actions and everyday decisions can influence the way lenders look at your finances. Now, as I mentioned earlier, right, the cost of co-signing. So many people think co-signing on a loan is a helpful action to take, especially if the person is your child, significant other, parent, or close friend. Similarly, many married couples or people in long-term relationships decide to merge their finances. It's important to know how this decision may affect your own credit score. Let's look at the scenario here again from with Anna and Bella, and how their merging finances and sharing lines of credit can affect the credit score. So Anna just bought a new home, but is farther away from work than her old apartment was. She needs a new way to get to work. She would like to purchase a new car. She has taken some steps to improve her credit and is now eligible for a car loan. Anna wants to use the loan to get a new car, but she has a problem. She needs someone to co-sign. So by responding to chat, should Bella co-sign on a loan for Anna? A for yes, B for no. I like it. I was saying no. Thank you guys for your responses. So while co-signing on the loan may not necessarily impact Bella's credit score, the loan will appear on her credit report. So there's no wrong or right answer here, but Bella's credit will be impacted negatively if Anna does not pay her loan on time. So that's why I would personally agree with a no, right? Because I can't control what Anna's emergencies are. Maybe she, spent more money than she wanted to in a given month. So then that's going to affect your score as well. So going back, if you did say yes, so when you co-sign a loan, you are promising to repay a loan if the other person does not do so. So if Anna pays off her loan on time, it could actually help improve both Anna and Bella's credit scores. But if she doesn't repay the loan and she misses payments, now you're affecting both scores negatively. Now, we've talked a lot about credit scores, but what about credit reports, right? Are they different? So your credit report is a snapshot of your credit profile, including your history. Every time you take out a personal loan or apply for a credit card, those actions will appear on your credit report. It's important to review your credit report regularly. It's one of the tools to build and maintain good credit. And as we see here on the slide, right, credit reports help lenders, such as financial institutions, understand how creditworthy you are. That is whether you're likely to pay back a loan, a given one. Now, the three nationwide credit reporting bureaus calculate your credit based on the factors that affect it. And we talked about these already, right? Experian, Equifax, TransUnion. Many people wrongly assume that checking their credit score or report will affect their credit score negatively. Not true. In fact, keeping an eye on your credit report can help you in many ways. It can help you detect fraud and maintain or work toward a better credit score. And I don't know if you guys are familiar with this, but you can get one free credit report from each of the three credit bureaus per year online or by phone. Now, to get your free annual credit reports, as you can see here, the website listed, right? Annualcreditreport.com. This is the only website that is federally authorized to give you your credit report for free. I'll say that again. This is the only website that's federally authorized by the government for you to obtain your credit reports for free. And then also the Federal Trade Commission maintains it. Now, you can request your credit report for free via the telephone as well that we see here. Now, what will your credit report help you do? You can help you in cases of reporting fraud. If you need to apply for welfare, they ask for these things as well. If you're denied for loan or credit application, you can review the report as well. Now, credit scores, unlike your credit history, are not currently included in the free credit reports available. So this report, again, as I mentioned, it's going to be a full history of what you've applied for. So it's not going to have that credit score included on there. So you can get your credit score by requesting it in various companies, including the 3 different credit bureaus that we talked about. Now, these credit scores used to be available only if someone, such as a potential lender, paid for them. Now, scores may be available for free from a number of different credit reporting websites. Using these services allows you to check your credit score whenever you want while monitoring your progress in between your annual check of all your reports. So who can give me a couple of examples in the chat of these free credit monitoring services? Oh, thank you, Sarah. Yeah, it's Credit Karma. So Credit Karma is one of those free monitoring services, right? So this is completely different than the credit report from the annual credit bureau. Because remember, like I said, the annualcreditreport.com gives you the report, not the score. So that's why people use websites like Credit Karma to help you monitor your actual score. That's the difference, right? So there's nothing wrong with Credit Karma. It's just that Credit Karma is only keeping track of the score and not really keeping track of the history based on the items that are being reported because of credit. Now, here's the other difference also from a credit report. So your credit report will contain 4 major credit sections. Review each section thoroughly for accuracy. Make a note of any inaccuracies or unknown or suspicious details. And we'll get into disputing and correcting those errors shortly as well. Now, as you can see, these are the 4 different sections that you'll see on this credit report. So the first one is public records. On here, you'll see lawsuits, bankruptcies, if there's any judgments against you, if there's any delinquent or unpaid taxes, credit accounts. You'll see what your debt status is and what open and closed accounts are there. Personal information. It'll include your name, your birthday, your social security number, your current address, and also any previous addresses involved, and your name of your spouse or employers. And finally, it'll give you your credit inquiries. Who's checked your credit? Organizations, people, verification that requested to verify your credit in the past 2 years. Just so you guys know as well, right, for reentry, when you go look for a job, they're going to take a look at your credit report. They're going to see where you've lived, your past history of employers. That's all going to be reflected on your credit report. So this is why I would suggest take a look at your credit report. See if all your previous employers are listed on here, because the current employer that you're looking to work for may have questions. Say, hey, in your resume, you mentioned that you worked at XYZ company. We didn't see that on your report. So it's good to always take a look at that so you're ready to answer those questions during an interview process or when you're moving forward for that new employer. Now, some of the things that are not included in the credit report is medical information. Now, the reason why I say that is because medical information is completely different than delinquent items, right? Medical information, the report does not disclose, blood type, how many times you go to the hospital, things of that sort. They're only going to report if you have unpaid hospital bills. So that's going to be part of that public record section where you want to collect it because you didn't pay a hospital visit. Other information that is not shared in the credit report is religion, race, sex, information about your checking, savings accounts, information about any debit or prepaid cards, and finally, private loans from friends, family, and benefactors. Now, it's important to review your credit report regularly to make sure the information is accurate and up to date. Your credit report contains information about your credit history and how well you manage debt. It can also be affected by public records, as I mentioned, right? Bankruptcies, unpaid debts or bills like hospital bills, or how much of your available credit you're using. Most of these types of information can remain on your credit report for up to 7 years. Bankruptcies can remain on your credit report for up to 10 years. And certain tax liens can remain on your credit report indefinitely if not paid off. Now, it's important to look at following the dates carefully. So it's important to look at the date your account was open. Remember, the length of your credit history accounts for a good part of your credit score, right? Make sure that the opening or closing dates of accounts are listed correctly. Sometimes we've seen, hey, I've had my Target credit card since June of 2020, but your report is showing, hey, this card started being reported September of 2020. So now you're missing 3 months of that credit history that you've been building, right? So it's good to review those dates. Second thing as well is review the dates of public records. Any public record of legal activity should be erased from your credit score after 7 years. The only difference is bankruptcy is 10 years, right? So, if you see that there's a bankruptcy there that's 11, 12 years old, then we will we will find out ways in the later slide here on how to dispute that information and how to get that removed from your credit file. I see a question. What counts as a public record? So public record, let me go back to the slide if I can. So right there, right? Lawsuits, bankruptcies, judgments, delinquent, and unpaid taxes. And I also included on here hospital collections as well. Thank you for the question. Oh, I skipped ahead the last piece of verifying dates. So dates of credit request. So whenever anyone, a lender, financial institution, employer, or homeowner requests your credit report, your credit score may be affected. Check the dates to make sure they correspond with your life events. If you have noticed any errors, you must dispute the errors with the credit bureaus. And I see a question. How long does collections last? Yep, it is still 7 years. It is still 7 years. So the statute of limitations in California is if you have a collection item older than 7 years, then you have a right to dispute it and have it removed from your credit report. Now, I will tell you this. I have seen when debt gets sold to like a third-party collection agency. Have you guys seen that, right? Where, let's say you have that Target card, you max it out, you don't pay it off, Target sells that debt to a third-party vendor. And you're going to get all those nasty phone calls hawking you to pay that debt back. You don't pay that debt, it gets sold to another party, right? And we keep going through that cycle. Let's say 7 years pass, and you still get those phone calls from these third-party agencies that bought that debt. They cannot collect on that debt because you've reached the 7 years, which is the statute of limitations in California. The only way they can collect that debt is if you actually agree with that collection agency to make those payments. Most of the time, I've received those phone calls too, where they tell you, "Hey, you owe Target $1,000, but we'll settle the debt with you for half of that." Why is that? Because that debt should no longer be reported in your file. And they just bought that debt over the years to try to recuperate some fundings. And we'll talk about scams and things of that sort going forward as well. I see Myra asked the question, what impact does closing your credit card have on your credit? So it does have a minor impact on your credit. Typically, we see a 5 to 10 point decrease in your credit score. Now, I know a lot of people say, well, I haven't used it in years. The bank or Target closed it out for me. So it's important to keep track of those. I know Credit Karma does a good job of reminding you, as well as saying, hey, you haven't used this card in X amount of months or X amount of years. It's gone dormant or inactive. Just use it once. Buy something small. It doesn't matter the amount. It could be $5, and as long as you pay it off, you keep that card active, and that shows that you're maintaining a long, strong, good credit history, right? Is there another question? Is there a way to have collectors stop calling you? We'll talk a little bit further on another slide there. So thank you for that question. Yes, so this is yeah, this is an American course. I'm just citing California because we're in California, but some of these rules will apply throughout different states. I know, but a lot of different states, I can't speak to other states about their statutes of limitations, but I can say that the bankruptcy statute of limitation is 10 years across the board. All right, and this is one of the things, right? After we review the credit report, we see that there's some dates wrong on here. So what is that you can do to dispute some of these items? So as I mentioned, right, there's a few steps you can take if you need to dispute items on your credit report. And the first one is write a letter to the credit reporting agency. Tell the credit reporting agency what items you think are inaccurate. And this is important to understand. When you're writing this letter, make copies of all documents that support your position. The letter should include your name, address, copies of all items in question, and a copy of your credit report with the items in question circled. So that same annual credit report, you can look through it and you'll find the dispute forms actually on the back of the report as well. So you would just make copies of it, send it to them, circle the issues, and then they'll be able to address it with each individual credit reporting agency. So sometimes this is kind of a good rule of thumb too. Make sure you look at all three, because there's some things that TransUnion will report, some things that Experian will not report, and some things that Equifax will report as well. So it's good to look at all three of them so you know which reporting agency to dispute with. Secondly, right, send your letter by certified mail and request a return receipt. By law, credit items in question, unless they consider your dispute frivolous, they can investigate it. So by law, these reporting agencies must investigate the items in question. Sending the letter by certified mail will ensure that they receive your letter. So now they say, well, we never received your letter. Yes, you did. I have proof that it was signed off. Now, when the investigation is complete, the credit reporting agency must give you results in writing, along with a free copy of your report if the disputed results changed. And then finally, send a letter to the information provider. The information provider is the person, company, organization that provides information about you to a credit reporting agency. Make sure you let them know that you dispute an item in your report as well. Include the same information, your credit report, a list of the disputed items, and a clear statement of your reasons. Include copies, not originals, of any documents that support your request for correction. Mail this request via certified mail again, and request a return receipt. Fixing incorrect information is an important reason for reviewing and checking your credit report regularly. So, but what happens if you have experienced an unexpected life event, such as a loss of job, an unexpected medical issue, a divorce, and you find yourself in debt? We're going to talk about that here on the next slide. So if you've been through an unexpected life event, here are some steps you can take to reestablish your credit. They're very similar to how you establish credit, right? So step one, monitor your credit report. Step two, pay your bills on time and regularly. Nothing builds credit faster than regular and consistent payments. And what's the theme that I've been talking about the whole course? Pay your bills on time, even if it's minimum, right? Step three, get credit counseling. There's a lot of not-for-profit agencies that advise people about money and debt management, that help you create financial plans and offer workshops as well. And then step four, consider financial products. As discussed, getting a secured loan or a secured credit card can help you rebuild that credit as well. However, there may be trade-offs to this, right? Such as fees, minimum deposit amounts. Like I mentioned, minimum typical for a secured credit card is $500. So keep that in mind. And that you should understand and ask the financial institution about before applying. Because I have seen that there's smaller credit unions that can start you with a secured credit card with a minimum of $300. So it's always important to do your research as well. I know we look at Wells Fargo, Bank of America, BMO, all the bigger banks, right? They have their minimums for the secured credit cards. So I would say do your research. If $500 seems like too big of an amount for you, because you're more worried about paying rent and things of that sort, look for a smaller bank that can help you reestablish that credit. Now, the Credit Repair Organizations Act, I think this is touching on the question that was asked, right? Let me see if I can bring that up here. about how to have collectors stop calling for you. So this is kind of touches back on that. So the Credit Repair Organization Act helps protect your rights, including preventing credit repair organizations from engaging in deceptive practices, such as false advertising that can cause you harm. In other words, there's these credit repair organizations that overpromise. For example, they tell you that they're going to delete all your bad credit, regardless of whether it is legitimate debt that you have accrued. Also, credit repair services cannot demand advance payments. They must put contracts in writing and must offer consumers contract cancellation rights. So if you're receiving these phone calls, they're harassing, right? You can cite the Credit Repairs Organizations Act. Say, hey, you're violating my rights. I'm going to report your company to the credit using the Credit Repair Organizations Act, and I guarantee you that'll stop those collection companies from calling you and harassing you. Now let's go back to Anna, right, and Bella. So Anna now she's trying to rebuild her credit, but is having trouble keeping up with her credit card payments. She reached her several credit repair companies. Let's see if we can help her recognize the good from the bad. Anna's trying to rebuild her credit, but is having trouble keeping up with payments. So she researches several credit repair companies. The first company promises to remove bad credit information from her report. All she has to do is pay an upfront fee. Anna is worried about all her bad debts, but the company assures her that it can scrub all negative information from her report. The company also advises Anna not to contact the credit bureaus directly, since doing so would negatively affect the company's efforts. Do you guys see any red flags after what I talked about? Right, exactly. So these red flags, scam, yeah, thanks. So these red flags, right, include that the agency promises to remove all bad credit and that they're asking for an upfront fee before they do any of the work for Anna. And they also advise her to not contact the credit bureaus. And what did we just learn? You have the right, to contact the credit bureaus and get things corrected off your credit score. Now, the company that Anna found in her research promised also to remove bad credit from her credit report and required her to pay fees to do that as well. Anna should not trust the company's promise to remove her bad credit notes from her credit report for an upfront fee. And we'll go back to the Credit Repair Organizations Act, right? So the Organization Act says that credit repair companies must successfully remove the credit inaccuracies from individual report and provide proof that the report has been changed before they can request payment for services. This can take up to 6 months, though, so I will say that. So this is a red flag, and they're looking to scam Anna. Like all of us, Anna should also be suspicious of any company that promises or guarantees to remove all bad credit information. Anna should not, again, I keep saying this too, because I know a lot of people that fall into this trap, right? Pays an upfront fee. We'll help you get all these items removed. But we just learned that you have the right to do it on your own. And again, this is just recapping other red flags that you can spot on a credit repair scam. So they include requiring upfront fees, promising to remove all the information, offering to scrub or alter credit information, instructing you not to contact the credit bureaus directly. And again, as I mentioned, right, you are entitled to dispute these errors for free, and it's your legal right to do so. And another big thing that we've seen with these companies is asking for a signature on blank paperwork. If an agency asks you to sign blank paperwork so it can act on your behalf, it's most definitely a scam. Never sign paperwork, especially legal paperwork, without reading it thoroughly, ideally with the help of a lawyer. Credit, and then also credit profile number scam. These promise new credit identity by issuing you a credit profile number or a credit privacy number that is similar to a social security number. Those are also scams. We have been seeing those a lot more lately as well, where they tell you, you know what, we're no longer going to report anything to your social security number. We're going to give you a whole new number that's specifically going to be focused on fixing your credit. That's a scam as well. And then also, finally, fake social security number scams, right? Any agency that encourage you to use a fake social security number or apply for an EIN number for tax purposes is a scam. EINs, well, before I say this, does anyone know what an EIN is typically used for? An employer identification number? If you don't, that's okay. So an EIN number or an employee identification number is typically used for businesses and also nonprofits like H.I.R.E as well. That's a perfect example to show you that H.I.R.E has an employee identification number. Now, this is also some great information to know, right? If you feel like your credit report is poor, you may consider taking advantage of credit counseling services as well. Many agencies offer free initial sessions. So these agencies may help you create a financial plan to decrease your debts. If you choose to use a credit counseling agency, look for agencies accredited with either the National Foundation for Credit Counseling or the Financial Coaching Association of America. So look for services such as better money management techniques, debt reduction strategies, and financial plan development, and get information about the services and possible fees before paying anything or providing private information. So if you are looking for these right credit reporting agencies that help, these would be the two I would consult with. And I know we covered a lot of things that could potentially affect your credit. Oh, I think I see a question. As I mentioned, right, we did cover a lot of things. And the good news, right, is if you good habits and strategies around managing your credit and debt can go a long way toward helping you keep your credit score high. So here are some basic strategies that we went over, the most important ones, right? You use less than 30% of your available credit. Very important. And that goes tied to the next bullet point. Do not max out your credit cards because that affects your credit score heavily because it makes creditors look at you and say, well, there are higher risks because we don't see a potential of them paying us back if they're just maxing out their credit cards. And what's the other big one that I kept talking about? Pay your bills on time. Pay your bills on time. This will help maintain your credit score and even build. And if you can, right, pay off your credit card in full each month. Pay off your loans on time as well. And do not apply for multiple loans and credit cards at the same time. Because what that does, it creates a system where the lenders are looking at you, that's the person that's desperate for credit, right? They're applying for multiple loans, multiple credit cards at the same time. You're just looking to get approved. And at the end of the day, you don't want to be, you don't want to be treated a different way because they make the assumption that that's the reason why you're applying for multiple loans because you're trying to fix a problem. And then make a financial plan or debt management plan to reduce debt, right? I know a lot of us have debt, and we just be smart about how we want to pay it off. If we can pay more than the minimum, try to do so. Create and follow a monthly budget. And finally, review your credit report for accuracy. And again, it's free once a year. I believe during the pandemic, annualcreditreport.com was actually allowing you to look at your report once a month because they were seeing a lot of fraud in this space. I think now it's gone back to once a year. If I'm not mistaken, the last time I checked, we were able to do it twice a year, so semi-annually. So if you have more questions, feel free to go annualcreditreport.com and they'll walk you through if it has gone back to once a year or if they're still offering it semi-annually. And then, in summary, your credit score is something that can affect your entire financial life, right? So make sure to take good care of it. A good credit score can help you achieve more of your financial dreams. If you have bad or poor credit, don't be discouraged. Just keep track of your credit reports on a regular basis, adopt the responsible credit habits. That way you can help build your credit score. And I know it can be an uphill battle and it may seem like it's taking a long time, but making small changes now can pay big time later.